Hi there folks, welcome to this week's weekly Forex Forecast, Monday the 17th of January. Okay, so we had a busy week last week as far as the US dollar was concerned. We had lots of Fed speakers, Powell in particular, out there on the news wires basically getting really hawkish on interest rates in the US dollar. Even Jamie Dimon coming out now saying maybe 6 or 7 interest rates are expected in the US. Regardless, the US dollar is basically coming under a little bit of pressure, because this interest rate story is pretty much in the market. We pretty much know that the US are going to be subjective to higher interest rates this year. So it's pretty much baked into the pie, as it were. So the US dollar is coming under a little bit of pressure. Maybe it's time for the other currencies around the G8, maybe it's time for them to start getting hawkish as well, as inflation becomes rampant around the developed world. So maybe the US dollar is going to continue under a little bit of pressure. We actually saw some reduction in retail sales numbers, some key inflation data coming in a bit worse than expected in the US as well. All to play for certainly there. And we've got a busy week ahead of us this week as well. We've got the Bank of England chairman. He's going to be talking as well this week. Is he going to be talking up interest rates? Quite possibly. We've also got Australian data releases as well in terms of unemployment. And Djokovic, well, he's been sent home. Anyway, let's have a look at what we're looking at this week. Now, if you want to get this weekly Forex forecast, head over to the forexsignals.com website. If you scroll right down to the bottom here, you'll see all our bells and whistles that we offer, all free of course. You've got the lot size calculator, you've got the profit calculator, your pivot point calculators, all this really valuable free information. Click on Forex Forecast and you pull up the Forex Forecaster page. There I am. NFP shakes the US dollar. That was last week. If you want to get this report sent directly to your email inbox, just fill in the field here with your email and your details, and it'll be sent directly to your email the moment it has been released. And don't worry, we won't be spamming you or sending your contact details on. Okay, so this week, Max in particular, he's looking at a short play in the in gold against the US dollar. Of course, we've had some big moves in gold to the upside. We do seem to appear to have come into some resistance to the upside. He's looking at potential retracement as we come in to this resistance zone up there as well. Max is also looking at the NAS100, that's the tech stocks. He's bullish on that at the moment, as we're seeing a bit of risk on coming back into the markets. Global stocks basically just poised, flirting with all-time highs. He's expecting the NAS tech stocks to continue on their bullish momentum to the upside. Now we've broken through what was level of previous resistance, now should act maybe as support. And I'm looking at a trade in the pound against the Australian dollar. I'll talk about it in a bit more detail when we get onto the charts in a moment. Pound is super strong. Pound, Bank of England maybe looking to move interest rates again this time around. You remember they hiked interest rates the last time that they were out, up 0.15. Markets are going for actually another increase. And of course, I'm expecting the Australian dollar to come under a little bit of pressure with the employment numbers this week, and also China cut their interest rates over the weekend. Chinese yuan and the Australian dollar pretty much linked. Often said that the Australian dollar is a proxy for the Chinese yuan. So the Australian dollar could come under pressure at the moment. It certainly is one of the weaker currencies on my momentum meter, which I'll show you in a moment. Now, in case you didn't know, we do have 2 new mentors that have joined our team here at Forex Signals. So we are streaming live around the clock. Truly is a 24-hour service now, streaming up to 7 or 8 times a day, looking at trading opportunities. One of the new mentors, he's put his contribution in this week. His name is Shane, and he's basically covering each day as it unfolds what to expect in terms of the economic front. So if you want to be briefed about what's ahead, it's well worth getting your eyes on that as well. So thank you very much for Shane for that as well. Right, let's jump on to the charts now, have a quick look and then look at the economic calendar as well. Come on, let's go. Okay, so before we get into it, let's have a quick look at my faithful momentum meter. Remember, this tells us exactly where the money is flowing at the moment. Doesn't predict the future, unfortunately, but it does tell us exactly where the money is flowing at the moment. I've currently got this set on a 1 hour chart, so it's telling me on a Monday morning where the money is heading. And you can see where the money is heading. It's heading into the Canadian dollar. Canadian dollar is catching a bid this morning in the start of the European opening, and the Japanese yen, this bronze coloured line here at the moment, that is trading off. CAD against the yen, that's the biggest mover at this moment in time. You can also see this green line. This is the US dollar having a bit of a pullback. Good week last week for the strength of the US dollar. Obviously, bond yields pushing higher as well. Hawkish comments coming out of the Fed presidents. As I say, the US dollar is coming under a little bit of pressure at the moment. If you look at the 4 hour chart, that normally tells the best picture for me to give you my sort of plan for the week ahead. You see the dollar was strong last week, having a bit of a pullback at the moment. The biggest mover here is got to be the Japanese yen. Japanese yen is seeing money outflows at the moment, and the Canadian dollar, again on the 4 hour chart, is showing the strength. CAD yen may be one to keep an eye on this week. Okay, so those of you that watched the weekly Forex forecast last week, you'll see that we mentioned the US dollar against the Canadian dollar, against the loonie. Indeed, we did breach through this key level of structural support and put on a big momentum push to the downside. Those of you that are following technical analysis and head and shoulders patterns, you'll be looking at that target down there at around the 123 level that we spoke about last week. Now, we've had this pullback, okay, and pullbacks often happen. They often stall around the 50%, and that's what's happened here at the moment. So I think now we are on course for completion of that pattern. This is the trade from last week. It's working out quite well at the moment. Okay, so let's have a look at the British pound against the Australian dollar. Now, technical traders will often look back at the chart, look for support and resistance, and use these for when they are breached to act as the reverse. So, for example, if you have a strong resistance level, once that's broken and cleared, that will often act as support. Now, as a trader, I always like to think of what would I do if I was in a particular trade? Maybe not in the trade, but what would I do? For example, had I been in this trend to the upside, had I been enjoying all these profits, where would I have taken profits? Well, clearly, I would have taken profits at around this resistance level. And that is exactly what happened when we got up there at the beginning of this year. We had a big pullback. This pullback was basically all these traders up here taking profits. Now we've had another go at this level of resistance. But the pullback that you're seeing at the moment is really quite slight. In fact, it's pretty slight. It's holding the old resistance zone. This is showing you now that this level of old resistance is acting as a clear level of support, which is why I think this predominant trend, the traders that got into this trend, these are going to win the battle. And the path of least resistance is now to the upside. When you see this type of price action at this level of resistance, the initial pullback, that's your profit taking, gone, they're out of the game, trend continues, and the further pullback is quite slight, gives me good reason to think that this trend will just continue to the upside. Now, for those of you that have been following me for the years will know that I'm not a big fan of all the technical indicators. I'd rather look at pure price action and at support and resistance structure. This is a classic example of a pullback into structure. So for me, I think the trend clearly is defined here in an uptrend. We've basically bounced off it since the end of last year. We've been in an uptrend now all the way up down from 149, about 500 pips or so. But all trends have pullbacks along the way. They pull back into structure. So clearly, looking at this 4 hour chart, you'll agree here that this bit of consolidation that you saw around this zone here went on for pretty much about a week. Bit of consolidation there. This is price structure. And then finally, when we do break up through that price structure, we come back down to retest that price structure. It now acts as support, and off we go again. I'm looking for this type of price action across multiple different currency pairs, looking for areas of value to get into a trend, looking for the pullback into structure. This is the pound against the Japanese yen. I'll be buying that all day long around there at a 155.50 or so, and it's looking now as though we are going to put in an attempt at a triple top there at 157.70. Beware of that level for profit target, certainly. I always say if you want to get your risk-reward ratio up, never buy right in front of big levels of key resistance, and never sell into key levels of support as well. That will really get your risk-reward ratio up as well. So pound yen. I mean, pound's strong across the board, as we know. Okay, so now let's have a quick look at the economic calendar for the week ahead. Quite a lot coming out this week. So head over to forexsignals.com. If you scroll right down to the bottom, you'll see all our bells and whistles and so forth. You've got profit calculators, pivot point calculators, lot size calculators, all these free tools. Head over to the economic calendar, Forex economic calendar, and here you'll see all the news events that are coming out this week. Now, even if you're not trading the news, I do think it's important that you are aware of the news releases. These can have volatile effects on the markets, and the last thing you want to be doing is placing your trade just ahead of a big news event, which is basically a flick of a coin and could get yourself stopped out before you even had a chance to put the trade in your journal. Correct way to read this, as always, is to look to the right and look for the impact status. Anything red is high impact, anything in yellow is medium, and green is low impact news. If you're unsure of any of the news releases, what they actually mean, if you just click on it, it will give you a brief description of what the news event is and how it is going to affect the markets. Okay, so you can obviously tell by the country of relevance there. Okay, Monday the 17th of January, not much going out. We had some data out of China. Also noticed that China reduced their interest rates over the weekend, which is quite important, certainly there. Right, so we need to look out for the next 7 days or so. So I'm just going to click the 7 days. On the 19th, which is Wednesday, we've got quite a lot of data, inflation related, out on Wednesday. Okay, so we've got CPI, Consumer Price Index. That is basically inflation. You know, the central banks, they look at inflation to give us clues on where the interest rate policy will go. So we'll be looking at that. 5.2%. Remember, central banks are mandated to have inflation in and around 2%, which is one of the reasons why central banks around the world are now looking at moving interest rates higher to basically make the cost of borrowing more expensive. Of course, if borrowing is more expensive, people are going to borrow less money, in which case they're going to spend less money. And also, if people have money to save, they will be saving money because interest rates are going up. So it basically curbs spending to a certain degree. And of course, a lot of this inflation, though, is being driven not just by spending, it's being driven by supply chains and so forth. And you'll see also the producer price index as well. Talk about supply chains, 13.7% on producer price index year on year. That basically is just that, supply chains, which is one of the reasons why inflation is driving higher. Okay, so just scrolling down, I mean, don't ignore these green events. It's always worth looking at. But of course, they're not the biggest ones. You got Bank of Canada, Consumer Price Index, inflation out of Canada, 3.6% expected there. Then you've got Bailey speaking. There's a lot of talk at the moment in the UK about interest rate rises again. We've already had one interest rate rise recently. They're now talking about the next rise again. Interested to see what Bailey, he's the Bank of England governor, see what his outlook is. I tell you for what, he is basically pretty hawkish at the moment, so I wouldn't expect him to be anything but hawkish. You may see pound supported on the back of that. All important Australian job numbers later on in the week. Now, we will be looking at that. Obviously, the Australia has been in tight lockdown during the pandemic. That's likely to affect the job numbers out there as well. So we'll be keep playing a key eye on that. Of course, the Australian currency is coming under a little bit of pressure this morning on the back of the Chinese rate cut, I should say. Obviously, the Chinese currency and the Australian currency are very much linked due to commodity prices and so forth. So that's basically it. A bit of PMI data. Consumer price index out of the Eurozone. I'm not sure why they put that as medium, and the other CPIs are high impact. But there you go. CPI coming out of the Eurozone on the 20th. And as I say, retail sales again out of the UK on the 21st. Retail sales is an important one because it basically tells us, despite the high cost of prices, are people still spending money? If retail sales are edging up, then that obviously gives more sort of weight to the inflation number, not just being supply driven, but also people are spending more money. So retail sales are becoming more and more important at the moment, certainly since the pandemic and so forth. So as I say, even if you're not trading the news, make sure you are aware of these news events, and you can get this economic calendar free from the site here at forexsignals.com. Okay, so I hope you found that useful. As I said, if you want to get this Forex forecast directly to your email inbox, just leave your details here in the fields on that page there, and it'll be sent directly when it has been released. If you like this video, give me a thumbs up. If you didn't, give me a thumbs down. Don't forget to leave a comment as well. Anything else you want included in the Forex forecast, I'll be only too pleased to hear your views on that. Don't forget, follow us on all the socials as per usual. And of course, if you don't subscribe to the channel, make sure you do. And if you hit that notification, that of course will notify you the moment the next video has been released. Last week's video doing very well at the moment. One of the reasons why maybe you should stop trading Forex if you tick certain boxes. Go and check it out. It's running around 30,000 views just in a couple of days, so it's certainly hitting some eyes. If you want to come and join us in our daily regular live streams, you can do so. Just head over to forexsignals.com. Can take out a 7-day free trial. If you don't want to stay, you don't have to pay, but I'm sure you will love it. There we are, discussing trading opportunities throughout the week. Now, if that's not your thing, that is not a problem. I'll see you next week. Have a good week.